Nilesh Shah is Managing Director and CEO, Envision Capital. He's with us here in our studios to run us through what he's making of the day with the budget, the FOMC, and of course, this Paytm news hitting us yesterday as well. Nilesh, great to have you with us here. Thanks very much. Let's just begin with this one, Paytm. What are your thoughts in terms of what the RBI has done? It's kind of, in a way, unprecedented. How the order is, in a way, devastating for the company, right?
Oh, absolutely. I mean, this is a huge challenge, I think, for Paytm, and it looks like that it will take some time for it to basically be able to overcome this challenge. And yes, and it creates a whole period of uncertainty for the company, the business, and the stock, because how long it would take for them to resolve, these challenges is anybody's guess. And it's been a series of regulatory actions. It's not like this one thing. I think probably for the last, over the last 1 year, there have been 2 or 3 such situations where they've had a similar situation. But obviously, this one is the most aggressive kind of a situation to be in. So I think it's going to take some time for them to be able to resolve it. The question is how long and in what form. One really doesn't know, but I think right now there is still a lot more pain to kind of in the stock.
Okay, Nilesh, first of all, thank you for dropping by on a very big day for us. 2 questions. We have invited you to ask you budget reactions, but 2 big stocks are going to react. Reliance, the Disney deal has been announced in the Wall Street Journal. Disney has sold Indian assets to Viacom 18 for all of $3.9 billion, a far cry from where they began. Any thoughts?
No, I think this is a huge positive. I mean, we own Reliance, so to that extent, I have a vested interest. But it's a huge positive. I think it's a massive kind of consolidation which is there, and it puts Reliance and its media business in a pole position. So to that extent, I think this is a huge and a massive and a positive development.
Okay. I just media giant in the works, right? Where once this deal goes through, from a retail investor standpoint, what is the big take?
No, I think from a retail investor's point of view, I still believe Reliance represents one of the best opportunities from all the businesses put together, be it the conventional energy business, the retail business, the new age GeoMart, as well as now the media business. And in each one of them, it's essentially a leader. So pretty much gives you an exposure to all the kind of high growth or hyper growth businesses going forward. So I still think Reliance is a fantastic buy.
Okay, now for the budget.
Latha, there's one more question before we get to the budget. PB Fintech, and congratulations. You've had that in your portfolio. Yesterday, we saw a very large move. We spoke with the management saying that 30% top line growth for many years to come. But you already know that. I mean, you were telling me before we came on air that they've maintained that for some time now. Market's realizing it. What's your sense on PB Fintech? Is it viable here if one does not own it?
So Prashant, obviously the stock has kind of moved up, but I think if you basically want to kind of own a business for the next 5 or 10 years, I still think PB Fintech is attractive. It may probably from a very short-term point of view, it may not make sense, but from a 5 to 10 year perspective, I think it's a great buy. The runway of growth is massive. And the way I see it is that the way we talk about, say, a Pidilite or an Asian Paints or a Titan as a great franchise, my view is that some of these new age businesses, including a PB Fintech, 5 or 10 years later, will kind of get emerged as a consumer franchise, where the growths may not be as hyper as what they are today, but they would still be outstanding businesses. The business is growing. The business is capital efficient. It does not need any capital or cash flows to grow. And it has several adjacencies and optionalities on which it can essentially sustain, relatively higher growth for a longer period of time. So it has the making of a great business going forward. And these are the kind of businesses which will continue to have very premium valuations.
Okay. Since we are being joined by 2 more peers of yours, Nilesh Shah, the Managing Director at Kotak Mahindra AMC, and in a bit, Taher Badshah of Invesco also joins in. Gentlemen, good morning. Thank you very much indeed for joining us. Nilesh of Kotak, to you first. What would you want to hear in the budget, and what do you not want to hear in the budget?
So thank you, Latha, for having me over here. I want this vote on account to do 2 things. One, push consumption at the bottom of pyramid to grow as fast as the top of the pyramid, and push private capex to grow as fast as the government capex. If these 2 catalysts work out with fiscal prudence, Indians will become proud of their own country, and neighbors will envy us. In this budget or vote on account, we want to hear three things. One, investment will continue. Second, growth will be inclusive. And third, path of fiscal prudence will be achieved.
Okay. By
Well,
the way,
Nilesh, that's well put, like an Onida ad, huh? Owner's pride, neighbor's envy. But anyway, it's the finance minister and the entire team that you can see. You can see Sanjay Malhotra, TV Somanathan, the entire North Block bureaucracy, the army of the think tank, as well as the finance minister. I was hoping she would wear pink.
Why?
I wore pink. But anyway, it's lovely. She always comes in lovely sarees.
did you guys notice that there is unseasonal rains as well? I mean, I don't know where the rains have come
I was
from.
going
but
to say that. I know
all
there
through
were
the
people,
morning.
our Delhi colleagues were complaining the cold is bitter. It snowed in Gulmarg, a late snow, and that's
suddenly it
impacting.
started
And the
raining.
rain is just making it way more chillier. There's all the secrets that you want to know. You will know it, of course, in 2.5 hours.
Latha, I think that is not now. I think it's no longer a book, right? It's an electronic device, right? I mean, I think they changed it a couple of years ago. It's paperless, I think, right? The budget sort of document in the finance minister's hand as she, of course, proceeds to the parliament. But Nilesh is with us. Nilesh bhai, good morning. Prashant here. One thing we were discussing this earlier, which the government perhaps must do, because we talk about fiscal consolidation, the pace of it, etc. They've got a huge stock of wealth sitting in government companies, PSU companies, and we've seen an unprecedented wealth creation there. And the biggest wealth creation has happened with the government of India. Of course, they've got to realize it in terms of, actually monetize it. Do you think we will see that? And the best way to do it perhaps is going to be in the first year of a new government. Your thoughts?
Undoubtedly, Prashant bhai, every year, no matter where the markets are and which government is there, we have never achieved our divestment target. So I thought this time I will not speak about it. Maybe that will help in achieving divestment target. But undoubtedly, as you mentioned, we have to maintain path of fiscal prudence while spending money on infrastructure investment and creating inclusive growth. The only way that can be achieved is through better tax compliance, which is work in progress. But low-hanging fruit is asset monetization and divestment. Today, a large part of wealth creation in PSUs has happened because they have been, corrected from a management point of view, from a shareholder value creation point of view. But a small part is also attributable that in many counters, the floating stock is so limited that price discovery is not necessarily a market determined. A divestment will create supply. It will create more sustainable return from PSUs rather than volatility. And on top of it, it will help in funding budget and achieve path of fiscal prudence. So like all the years in the past, it is no-brainer that asset monetization and divestment should get priority.
Taher Badshah, welcome to the show and thank you very much for waiting patiently. The first question really is to you on the budget itself. There are a lot of these green energy and generally infrastructure-related expectations with the budget. Would you be on the front foot on any of these infrastructure or power stocks?
So, we have some positioning, of course, in some of these segments that you mentioned of the market. And I think Nilesh bhai already alluded to the fact that, he almost stole my thunder when he summarized what are the expectations out of the budget. And I think it's very clear that, we want continuity of what is happening. And at the same time, we need to have additional levers for growth to be visible for calendar year 2024 and beyond. We've had the industrial and investment cycle lever, which has been working very well for the last 2-3 years. And it will remain to be seen as to, what is the intensity that we can maintain. This time around, I think the budgetary compulsions will probably be a little higher. Last 2 years, a little bit of looser fiscal was tolerable, given that we were passing through COVID-related conditions. I think, given the fact that we are up against the MSCI bond inclusion, and in general, we have to kind of maintain, get back to the FRBM targets. I think this time around it'll probably be a little difficult. Let's see how much comes about in this vote on account. Or we might have to probably wait for the later part of this year. So I think continuity is most important, and we need to have additional levers, particularly at the bottom end of the pyramid. So that's something which will keep the market up. Otherwise, we might have some challenges.
Under that Nilesh stole when he said that the bottom of the pyramid needs income transfers. But so Nilesh, what you're saying is if that PM Kisan Samman Nidhi or something is raised to 8,000 or 10,000, that will be good. Populist this time is not negative; it's a positive. Is that what you're saying?
Undoubtedly, yes. This is an election year. We have to remember that. Second, 70% of India even today lives at sub-Saharan Africa level. We have to upgrade them. And third, we should also focus on improving productivity of our spending. The government has done a great job through Jan Dhan Mobile and Aadhaar Trinity to plug the leakages, which has expanded the coverage and also left resources for infrastructure investment. But now we should focus towards, apart from food, healthcare and education, which can lift these people permanently from bottom of pyramid. So there should be some more focus on how we are spending money, how we are providing subsistence in a manner that they are coming up on their own. Education and skilling will be the best way to upgrade a population from bottom of pyramid towards higher level.
By the way, the stock that is taking top honors right now is Godrej Consumer. Just look at that, almost 8% higher on that stock. It's been a solid operational performance, and it's a fresh 52-week high that Godrej Consumer is sitting at.
No, actually, it's very important because all the other FMCG companies, Hindustan Unilever and all, 2% volume growth.
Hardly anything.
This guy has produced 5% volume growth. So clearly, in the peer group, stands out in terms of performance.
Absolutely. And that was the point I wanted to get across to our viewer, that despite Godrej Consumer's performance being decent this time, the rural market is under a lot of pressure, right? And 35% of FMCG sales comes from rural India. Do you think there's anything in the budget that can be announced which would not just be a sentiment positive, but would actually put more money in the hands of rural India?
So probably, some of the conventional measures like expanding the outlay on Manrega, for example, that could be a potential driver. Deepening the overall financial inclusion program and ensuring that it reaches every rural household. I think that could be a key driver, and ensuring that whatever DBTs that we have been doing for a set of accounts, if that's further expanded, I think that is something which would leave more money in the hands of the rural households. The other thing is that it's probably not directly rural, but I think the continued focus on infrastructure built up. Last year, we've seen a 30% increase in outlay for infrastructure spending. Infrastructure spending is now 3.3% of the GDP. If that's enhanced, that's going to create more employment, more jobs, more activity out there for rural households, which they can basically send back to their houses in the villages, and they be able to spend more. So I clearly believe that it's going to be a comprehensive set of measures which can potentially lift the spending power of the rural households.
Okay, Nilesh, just before you, we had some guests saying that, yes, all this is good. Capex will be good, income transfer will be good, but everything is priced to perfection. So two-part question, do you think that we are running at, very rich valuations or adequate valuation? And secondly, where is your pocket of comfort?
So, Latha, I would agree that we're trading at very rich valuations. Yes, we're trading at premium to essentially the historical averages. We are trading at a premium, but so is the growth. This growth is quite phenomenal, the kind of growth that we're seeing, not just at the GDP level, the real GDP or the nominal GDP, but earnings growth is quite phenomenal. And we're seeing all-round vibrancy. This is not just about, domestic consumption. This is not just about exports. It's not just about services. It's not just about infrastructure. It's all of them firing on all cylinders simultaneously, which is propelling growth. And as long as growth sustains, I don't think valuation should be a concern. The day growth slips, valuations will become a concern. So I think till then, I think it's best to keep riding.
Yeah, absolutely. I just want to mention a few other stocks here because it's a very active screen. I mean, the index is absolutely flat. But look at, I mentioned Jubilant Food. But Westlife is selling off. I'm not sure if that's just sentiment kind of impact here coming through. Scient is down about, it's pulling back about 3.5%. If you can have these names up. AB Capital is down 3%. Manappuram is down 2%. So, is it the NBFC, Paytm kind of broad shadow on some of these names? I'm not sure. Piramal Enterprises is down about 2.5%. Piramal, of course, reported numbers as well, and market did not like the numbers very much. MapMy India is down about 5% as well. So Amber is down about 3.5%, although Dixon, which reported numbers, is higher. So very, very extremely strong, vibrant kind of open is what we have.
We have to remember, Prashant, that we are in an ambience today in the last 12 hours of a global market that's not doing well.
Yeah.
So there will be, I guess, that level of activity. But let me toss that to...
When is that stopped? Does that?
Sometimes it does. See, overall, we get back to the global
I'm just joking.
tango. But why not the expert answer that? Nilesh of Kotak, that question to you. How much should we worry about, or how would you parse the global occurrences, the FOMC statement, yesterday on our markets?
So one, FOMC statements were in line with market expectation. Market did expect rate cuts to begin in March earlier, but there were enough indication from Fed that this cycle is not happening in March. It may happen in May or June. So Fed did not surprise the market. It is saying it will be data dependent. Typically, when Fed starts cutting rates, US markets have witnessed a correction and emerging markets have witnessed higher flows. And more importantly, as Nilesh of Envision was saying, we are priced for perfection. But as long as we deliver on that perfection, as long as we deliver on that expectations, the ride should be fine. To some extent, we are benefiting from other self-goal. Russia's invasion of Ukraine, Brazil's choice of a communist government, China's design on Taiwan, South Africa's strife. All these things are limiting choices for emerging market investors. And India continues to remain one expensive but preferred destination.
Well, higher for longer, right? But in a different context, Nilesh. In terms of valuations, valuations perhaps will stay rich. Taher, good morning. I just want to talk about the PSU space with you, because you actually have a PSU fund. And my colleague Hormaz actually looked at all the PSU funds out there in the market, and we sort of parsed through your holdings. NTPC, BEL, Coal India, State Bank of India, HAL are some of the biggest holdings as a percentage of your assets in that fund. I think the fund has got some 700 crores of AUM. All large caps. I mean, do you own some of these railway stocks as well? Have you gone down the list, or this is some of the big PSU names in some of the old economy sectors? How are you looking at this space now, Taher?
So I think, Prashant, we've got a fair bit of coverage. We've not necessarily tried to kind of get into every possible aspect of the PSU space, but I think we've got adequate areas which to us make sense and probably have a somewhat more longer longevity as far as the business is concerned, and competitive advantages are strong. So that's the starting point. But for us, this strategy all along, we've been running this strategy now for more than a decade, and coming up to about 15 odd years. But point is that all along we've only had to kind of look at the strategy from a value standpoint. This was always supposed to be a cheap kind of strategy with dividend yield and so on and so forth. So it was positioned in that manner, and much of the time it was that. But I think this is the first flourish of growth that we are seeing. And, now obviously we are compelled to look at this strategy and look at this space and PSUs in general as a growth oriented strategy. We have to basically, we are now at a stage where, for us, evaluating public sector companies is equivalent to evaluating any other private sector enterprise as well, with the same kind of lens. We have to look at the growth characteristics going forward, because valuations are no longer, affordable, so to speak. So I think that is the change that has happened in this portfolio. We don't have a choice but to look at it from a growth orientation point of view. And as I said, that so long as if we can continue to see the thrust of the government in maintaining the overall capex intensity, continuity of the investment cycle, I think these areas can still do well. There is some area like PSU banks, etc., which probably might provide some value And then there are always certain pockets and individual stocks which might appeal. But by and large, I think we don't have a choice but to now look at it from a growth standpoint versus a value standpoint earlier.
Okay, thanks a lot, gentlemen, for joining us. Taher, Nilesh, thank you for being with us. Of course, we'll speak to you through the course of the day once the budget comes out and we need more analysis.